All right, everyone, welcome to this market on Monday. What a crazy market it is. So, I'm going to spend the first little bit just kind of going over what's happening so far, what I'm seeing out there, and make sure in the chat you're putting anything you want me to take a look at. For those who don't know, I just feel like I should introduce myself every now and then. My name is Michael Nauss. I'm a chartered market technician. I run statsedgetrading.com, where I like to use statistical analysis combined with technical analysis just to try to get a good old feel for the market. What we're doing more today is we're just going to zoom in and see, okay, what's actually happening today? What do we think is setting up for this week? It's one of the things that I like about having the Monday spot here is because I get to come in around this time, which I think is the most important time to kind of get a good feel for the week. That opening can be wild. Even the Sunday opening, which we'll talk about, was insane. So now things might be calming down. We might start to see themes here. So first, I want to talk about that opening. Let's go to like a 30-minute chart here and just look at this candle right here. This was the opening candle. So a lot of you guys were watching football. As a nerd, I was watching this. I was watching the futures. So we gapped down pretty hard off the open. There was some talk about tariffs back and forth. I'm going to tariff you. You're going to tariff me. My tariff's bigger than your tariff, that kind of stuff. And the market just doesn't seem to care anymore, which I think is really interesting and something I want to look at because we gapped down and this was, let's go into a 2-minute chart. Let's like go real degen levels of speed here right off the bat. Like this is a 2-minute chart. So right off the bat, buyers came in. And when you see a massive spike like this in something like the futures, this is programmatic. This is a fund, an institution. This is a programmatic buy program that was just flipped on and said, we're buying the market. Every ask that you see, we're buying some. We're just going to all the way up. We're just going to chase, buy. So that happened pretty much right through most of the night. And then we just consolidated at night, which makes sense around the Asian session. And now we're looking very, very, very strong today. So far, we're holding very well. But yes, that gap, again, this candle right here and then rip, just showed the market no longer cares about this tariff talk. So we're on to the next thing. We're not super concerned anymore, it doesn't seem, with these economic numbers because we had a couple, nothing really moved. And then also, we don't seem to care about tariff talk. So what are we going to care about? I think it's going to be earnings. So we can start to look into some earnings plays, some stuff that happened recently when it came to major earnings. And you can list, let me know your stock that either had earnings recently you want me to take a look at or has earnings coming up for sure. But this gap, I know I'm hitting on this over and over again. I think this is really important just to talk about the fact that the right away. And we've seen this a few times. So let's go out here to the SPY as opposed to the S&P 500. And let's take a look at a couple things. We had this gap down right here. Let's remove that so we can see the gaps a little better. So we had this gap down. This was around the 580 level. I think it was around where I started doing this show, actually. And I talked about this gap was crazy because the same thing came out. We had a big gap down. I don't know what this one. This one was FOMC related or whatever. And buyers came in right away. Look at the candles, right? I love to demystify technical analysis because we're not looking at. If anyone talks about technical analysis, and they have a billion lines and they're talking about Gartney patterns and all of this. They're they're a bit lost, right? What technical analysis is focusing on just past behavior of market participants. It's a giant crowd psychology game. We're trying to figure out what is the general populace doing and how can we ride their trends. So most technical analysis will be focused on two things. What's the trend and where were areas that buyers and sellers stepped in previously? You can see right here, massive, we undercut that level. That to me is what the kids today are calling liquidity grabs. Back in the day, we called it bear traps. Essentially, there's a lot of stops we could tell right below this level. A lot of people stopping out of long positions, a lot of people getting into short positions right at this zone right here. We undercut that and then we rip. Another buy program came in there. Another one gap down here. This was, I think, the first tariff talk. We gap down and then we rip. And then the next one, I think this was more tariff talk. We gap down and then we rip. So we're seeing this over and over again. Every gap down so far is getting bought and not just bought a little bit, not just holding, getting bought aggressively. And we saw that again. So as long as that action is going to take place, I think you have to be bullish stocks. I think you just have to be bullish stocks. You have to be bullish risk assets, because if they're waiting for discounts and they're buying them up, I'm going to stay with them. I'm not big enough that I'm moving the market, but whoever is buying these dips over and over and over again. So that's something that I want to keep an eye on. I want to focus on quite heavily. If this is reversing and we're starting to see the other side of things, where when the market gaps up, it's selling off, that to me is a change of tone. It's a change of sentiment. Now we have this resistance above. This is 608 ish on the S&P 500. Until we get through that, we are just stuck in this range. And we are in year 3 of a bull market. Year 3 of a bull market is notoriously range bound. So that, combined with the fact that we have this increased volatility due to, a tweet gets sent and the market rips 5%, another tweet gets sent and the market tanks a couple percent, that's just going to increase this volatility. So if you're feeling that in your trading, size down a bit. It's the only way we can deal with volatility, is you either get further out in time or you get shorter in time. Those are the two ways to deal with volatility. You can go to day trading if you want to be a mega degen, or what I do more of is I lower my size and I just zoom out a little bit more. All of this chop that's happening, especially this gap here and this gap here, all of this chop that is happening intra candle or intraday, this isn't very interesting to me, because I just zoom out and I say, well, we are still stuck in this range. So what I'm going to look for when it comes to stocks, I'm going to look for things that are high up in the range or things that are low down in the range. What is outperforming? What's underperforming? What's already broken out? What looks like it could break out? Because eventually we're going to have this range resolve. We don't know which way, but eventually it has to resolve one way or the other. We got to go move higher. We got to move lower. Who knows what it is. Now, if we resolve higher, then all of those names that are very close to a breakout or have already broken out, they're going to have that tailwind. Right now, they're fighting a headwind. So if you have a stock that's moving higher, that's very interesting, because it means the market is range bound, but your stock is beating the market. That's generally speaking what this is. We got to understand, what is the market, the S&P 500. It's just a basket of stocks. So when you're range bound, it doesn't mean that no stocks are moving. It means some stocks are doing poorly and some stocks are doing well based off the weighting of the S&P 500. If we take a look at something like SMH, semiconductors are dramatically underperforming the overall market. And then if we take a look at something like financials, XLF, this is doing, not today, but overall doing much better than the market. So that's what's happening when a market is range bound. We're having this rotation of money from the thing that used to be hot to the thing that is hot right now. Speaking of, let's go take a look. This is one of my favorite screens, this chart that I look at. And this is just my personal ETF list. ETFs, I go through all of these ETFs every night, every week, every month, to get a good feel of what's happening in the market. And I can generally get themes from this. Are we risk on? Are we risk off? So the bigger, the more green the box, the higher up we are. The redder, and the smaller the box down in the corner means it's down on the day. So these names are the ones that are up the most, followed by these names up here. That makes sense. So PSIL, psychedelics, continue to rocket. Had a bad day on Friday, but these names are just on fire, broken out of this base, dramatically outperforming the S&P 500. So PSIL is just kind of my proxy for that. We have UNG, which is natural gas, another risk on sector. That's what we're doing, is we're going through these. Are there themes that exist out there? So I'd classify this as risk on. And then now we're into commodities. Well, this and this. Where's UFO? UFO is also risk on. For those who don't know, UFO is a decent proxy for space stocks. I mean, there's ETFs for everything nowadays. So UFO, you can think of ASTS and Black Sky, a lot of these different names. I think with the whole T-Mobile Starlink thing, it's the only ad that I was able to see up here in the good old Canada, the Great White North. That seemed to be an important one. Just saying, a large company like that is putting their weight behind trying to do more with something like Starlink, I think is super important. So UFO breaking out into new highs. Again, this is a good way to take a look at procure space. So just again, a basket of space stocks. The rest, we're talking commodities. We're talking UNG. Full disclosure, I own a irresponsible amount of UNG here. But we have natural gas, things that are produced in America. I'm going to call these tariff winners. And if you are made in the US, then you don't really care about all of this tariff talk. If you have absolutely no exposure out there. So, metals that are made, steel that's made in America, natural gas, UNG is natural gas that is made in America, USO is oil made in America. These type of things I think are going to become interesting to get involved with and things to potentially trade because it's just the what we're seeing as something that's showing that hey, we're having this United States focused commodity area. So if we go to different things like this, we have a lot of this going on. We have gold that's made in America, OIH. WGMI is just your Bitcoin miners. That's going to move pretty close with Bitcoin, which we also see up right here. A lot of these things. COPX is our copper miners. I want to talk about COPX for a little bit because I think it's important. So they call COPX, they call him Dr. Copper. So the reason we call copper in technical analysis Dr. Copper is because it's a good representation understanding of what is the overall economy looking like. You need copper to build a lot of stuff. I mean, homes to electronics to whatever that has copper in it. So if copper is tanking, it either means somebody found a whole bunch out there somewhere or that people aren't really excited to build things, which could bode poorly for future economic development. If copper is moving, it means people are building stuff. It's going to be interesting. We're going to build a lot of things. That's generally going to create jobs. That's going to create growth. That's going to create money through the economy. So that's why Dr. Copper ends up being so important. And we're seeing a nice little push up here over the last 4 or 5 days when it comes to copper. So that's the main theme is think of things that are made in America. Mostly when it comes to the only things that are purely made in the US is going to be a lot of these commodities. When it comes to technology, things like NVIDIA, they're going to have parts that are shipped abroad. They're going to have some things they make in the US. A lot of these, the bigger the company gets, the more they're going to be a hodgepodge of where does their stuff come from. Even if it's 90% the US, if there's one little piece of a chip or something that the NVIDIA is not making, then that becomes a pretty big deal. So by doing this kind of analysis, we can just see that people are plugging money. They're pulling money into XMEs, another great example, which is just metals and miners. This is probably a good overall understanding of what's going on here. If metals and mining is doing good and moving higher, it probably means people are still worried about this tariff talk. Doesn't necessarily mean that, hey, we're going to get massive tariffs. Not like the market knows that, but it's just saying we are hedging by buying what's going on here. And then we got to look at what's at the bottom. KRE, XLF, KBE. These are all banking ETFs. These are going to be interest rate sensitive vehicles. If interest rates aren't going to be lowered anymore, because maybe the Trump admin just doesn't care about interest rates anymore, well, then these things are going to suffer a little bit. Same with things like ITA, XHE. There was this big article about how defense stocks may actually hurt with what's going on with tariffs and all that. Not that, I feel too bad for them. These guys make a bunch of money, but just something to note, right? We need to keep an eye on, hey, what happens to all of these different sectors under different administrative actions that could occur. So yeah, if you build a thing in the US, it does great. Or if you want to get high, I guess are the two things. MSOS pulling back a little bit. This has actually been one of the best of the year so far as it popped off this zone, but it'll be interesting to see what occurs in through here. Now, when it comes to psychedelics, I think, again, a lot of this has to do with the new administration. There's been some talk on maybe psychedelics or something like that. But I look at this and I say, hey, if the market was worried about the economy, if the big guys out there that study this stuff are worried about some sort of crash in the market, are they going to be plowing money into psychedelic stocks? I don't think so. I just don't believe that to be the case. So that is kind of what I'm seeing out here. So we're going to start going into some of your guys' ideas. Let me know. I do see Baba here. So we're actually going to start with that just because it kind of dovetails into a lot of what I was talking about. So again, full disclosure, I own a bunch of Baba. I bought it as it broke through this anchored VWAP. I know you guys have Brian Shannon on here all the time, a mentor of mine, a very great trader. Broke through this on a VWAP and continues to march and to grind higher. Exactly what you want to see. Up and up and up you go, getting to these all-time highs. And then FXI moving as well. Now, this is the kind of speech that I've given for China. Again, what we're doing in technical analysis, we're trying to gauge the sentiment of the markets out there and look for changes in that sentiment. And I look at this chart and I just think everybody hates China, and everyone's hated China for a long period of time. There's been no redeeming quality when it comes to China, no redeeming idea when it comes to these things. Apologize, hear my dogs barking. Someone rang a doorbell. The everybody hated China. So what if the tariffs aren't as bad as we thought? They're still kind of bad, but what if they're not as bad? What if everyone was pricing in 25% tariff and it's only 15%? Just it's to the point where you hear this thing on CNBC, they talk about all the time, price to perfection. It's kind of true. What if China was priced to complete disaster? Just like a good example is Carvana. This thing was priced as it was going to zero. This chart right here looked like it was going to zero. Everything about this thing said, hey, this is a really dumb company and it's going to go to zero. They had this little lift when it came to the fact that used cars were getting kind of more expensive. They had a short squeeze. They were a smart company and they issued a whole bunch of shares into that short squeeze, raised a whole bunch of money, paid down all their debt, all that kind of, if you're following the stock, you know. And the thing just ripped from $3 to $300. Not a 10 bagger, that's a 100 bagger. Those are super, super, super rare. So what if China, I'm not saying it's going to be a 300 bagger, but what if the same thing? What if everybody hates China? They say, right, Trump admin is bad for China, that, if the tariffs are going to cripple their economy. I've heard that, hey, China's going to go bankrupt a whole bunch of times in different ways. What if just like only half of that's true and ends up doing fine? That's my synopsis there. And that's what I see when it comes to that long-term chart, which is why I own Baba. I like it. Nice little breakout of this range, a little bit overextended here. Now, got to give the China disclaimer. Same thing if you were buying a psychedelic company, right? Just because we were talking about PSIL, or really anything, like a drug maker, pharmaceutical company. You have a couple things that are problematic about that you have to watch. One, you're going to have these binary events that come out. You're not going to know when they come out. You're not going to know what they are. And it's going to be the same with China. They're going to do something that you're not going to know, and the market's going to be closed when they do it because all of the action happens over there. So you have this level of worry that you also end up having the market closed during. So setting a stop loss, that's not going to do it, right? And when you have these gaps, just look at this chart. It gaps every day. It's because most of the trading is done over there. So for Alibaba, if something comes out and they have to report something, that's probably going to have to report it during China's open, not during America's open. So that gives you a little bit extra risk, which with risk can potentially becomes more return. But that gives you a little bit more risk. So you got to be careful. Also, let's just face it, who's really trusting a lot of, right, the numbers that come out of China? So you just got to be a little bit more careful, right? They don't have the oversight when it comes to their numbers and everything that we do over here. So just, again, be careful, but I think this is already priced in. I think a lot of this stuff is priced in. No one's shocked that, hey, China might not be super honest when it comes to their numbers, or that the government may manipulate prices. So, right, no one, but it's priced in. Just think of, what was it, that Didi when IPO'd, and like 3 days later, the Chinese government's like, nah, and it tanked to zero. And that was another wicked Kramer pick where he's saying to buy as much as you could, and the thing was zero like 3 days later. So yeah, just be careful. But China looks great. I love it. I think it looks great. Snapchat, still a thing, I hear from my nephew. This is not a great looking chart. You zoom out here, this is hard stuck in a range. So if you're talking for a short term trade, maybe the reaction to earnings wasn't positive. Right? We had earnings on this day. It sold off. It's trying to reclaim and it can't. We're sitting right at this support zone. It does not look like a great chart. Does not look like a chart that I'd get involved in. And what you got to do is you got to compare this to its competitors. So Snapchat's just an easy look is Meta. Right? Only the boomers use Facebook, but look at that, right? Up and to the left. So I think you have to keep an eye on when it comes to what you're looking at with a lot of these different things is just, hey, is it outperforming or is it underperforming? That's, I think, the major question you got to ask is what am I doing? Is it doing well or is it doing poorly, right? Is it something that's hitting new highs versus its sector or not? Because if social media takes off as a whole and people start investing again in social media, yours is lagging. That's what I look at Snap, and just hard stuck in this range, and it's very, very frustrating. Now, for me, it would just be, let's mark, we've gotten to $17 twice and we failed there. If we ever get through $17, maybe Snapchat becomes a darling again and can start to move. I know that's already what 60% gain from here, but you don't want to being stuck in a range in from my experience and in my opinion is even worse than losing money, in which if I'm losing money, I take my trade, I get stopped out, I lost money. That's it. I can reapply it somewhere else. I get frustrated when I'm in a trade and I'm in a trade for a long period of time and nothing happens because you're not losing money, and it's one of those psychological things where you're like, oh, I put 10 grand into Snapchat, it's still worth 10 grand, I'm not losing money. But as time goes on, you have to think about what else could I just put my money in the market and have made roughly 8% a year, right? Could I put it in bonds and I could just make 5%? So, right, could I put it in XYZ quantum robotic Ozempic maker and doubled it, right? So that's why things stuck in a range are less interesting to me. I want something that has moving and that is resting for some period of time, or even if you're looking to buy something that's crashing, something on the low end of its range. But when it's stuck in the middle, for me, that's just a stay away. SoFi, this one's been picking up a little bit, right? So this is more of let's take this and let's apply what we know here on Snapchat to this one. So with SoFi, right, we ended up having this overall range. We broke out of that range. That's what I'd want to see with Snap, is to mark the high and the low of that range and say, if we get going into that range, I'm going to get involved. You see how in Snap, you didn't have, or SoFi, you didn't have to be early. You could have gotten anywhere in this range right here and you'd already be up money. So now we have a consolidation going on. Gap down on earnings. You don't want to see a negative reaction for earnings. However, wasn't that negative. So it's holding on. I think you just mark these prior highs back here. I think you mark the higher prior highs at like 17.5, gets above 17.5. The chart looks great. Google, the person who's looking at SoFi, Stan Weinstein's stage analysis. Very interesting premise, and it's talk about the stages of the market. This looks like it might be starting stage 2 uptrend, which would be really, really interesting. And I'm just going to last but not least, I'm going to do this with something that's going to come out soon. I'm going to anchor a VWAP. So the average market participant, SoFi. So the average person, if you were dollar costing average daily into SoFi, your average price is like $9.50. So on average, people are making money in SoFi. That's got to increase sentiment a bit. I like the look of that, but I just think it needs another push. People didn't like earnings. It's the only thing that that only scares me. App. This was this is a great looking chart. Now we have earnings coming. I know I chatted about those. So The expected earnings is 1.26, which is roughly what it made last time, which is roughly kind of what this thing makes. But geez, this is a great looking pattern. Right? Talk about something that's not stuck in the middle of the range, but actually has a lot of upward momentum. That's this guy right here. Clear resistance at around this $400 area. And then if you zoom out, you can see what I like about this chart. Ever since the 2022 lows, just up and up and up and up and up, right? So there is nobody out here who is mad at this company for not making them any money. Everything's doing fine. We're hitting 126. You notice there's not as much to rant about when it comes to names like this because they just look good. And I think the trade here becomes on something like this fairly simple. If you're above this $400 area, you probably want to be involved. If we break below, you probably want to go for a stop, right? For me personally, this $300 zone. Now, I know that's a lot on a percentage basis, but that's what the market's giving you. This is a wider range stock. And you don't have stocks going from, I think it was, yeah, it's another massive bagger. You don't have stocks from going to 10 to 400 without being volatile. So I think this becomes, again, the technical analysis on this becomes pretty clear. You're just kind of trapped in a range here. You just got to see. I like that it's coiling at the top end of the range, but you need to see a little bit of a breakout. ASTS, this one's on fire today. So talked about this one last week, I believe, when I was on. Or no, talked about this on Friday with Jordan. And I love this. So this block that I have here, this is just how I draw my support resistance, just FYI. I was always taught you draw your support and resistance with a crayon, not a pencil. So these are zones. They are not points, right? It's not $10 is support. It is around $10 is points. That's why I draw them as boxes, not just straight lines. Undercut that, trapped in a bunch of shorts, got a bunch of longs out of the way, and then we rip. And it's hard to say, I'm bullish on something that's up this much in a row. I think that the T-Mobile thing that they had on how they're using Starlink, I think that just woke up this whole sector. So that's why I talked about UFO at the top of the hour. I think this whole sector looks fantastic. For me personally, I would need to see a pullback or some sort of base or something just to show that it's not just a short-lived spike. But it looks great. It looks great here. This is the anchored VWAP from all-time highs. So essentially just saying what would happen if you bought this name at the worst possible time, the all-time high. Well, you're back to being up money as long as you kind of dollar cost averaged into a bit. So you have here, you can see how it just bumped its head over and over and over again. That AVWAP finally broke through today, assuming nothing falls apart going into the end of the day. I think that's a pretty decisive breakthrough. Now for me, it's just waiting for patterns to get involved, to get long. I like that one. I also see Lunar, which I'll just touch on at the same time. The fact that this isn't going with the rest actually has me a little bit worried. I'll talk about this all the time. What is performing the best? What is performing the worst? Because generally speaking, in sectors, you only have some that end up being the darlings, and the rest go to crap. Right? Think of the cell phone wars. Right? Back in my day, right? You had tons of different. You could go and there'd be like, 100 different cell phone makers. Who remembers BlackBerry and Nokia? They don't really exist anymore. That's what happens. There's always, 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 when a sector gets hot, going to be one that wins and the rest that fall apart. And so and I'm not saying that's going to happen here. What I'm saying is when you have these things that are kind of correlated and move together, when one isn't performing, it gets me worried. However, it's still holding high up near its range. It's just consolidating, just chopping sideways after a major move. Overall, a bullish chart, but you got to look at it versus its peers and say, maybe my time or money is better spent elsewhere if it's going to be something that moves. CLFT, CFLT, maybe. If it so, this one, nice rounded base here, coming into earnings, right? So you got to be careful. I would just say that I know the person who posted it probably knew there was earnings, but someone else may not have. But this is the kind of rounded bottom or rounded base that you want to see. It hits a high, it starts to pull back for a while, then it goes sideways for a while, and now it's turning back up. So The earnings are the estimate's zero point 0.6, so 6 cents per share. I think that's fine. As long as you get obviously around there. From the longer term chart, if we go to a weekly chart, let's give this a second to load. Here we go here. CFLT. Go to a weekly. You can see stuck in this range, right? So what you want to see is you want to see the resolution of this kind of cup or of this pullback to quickly get you through 33, 34 bucks. And then maybe it can start to move as well. If we do the same thing here where we end up anchoring a VWAP from the initial IPO. So this is just saying from the life of the company, what's the average market? Where is the average market participant? You can see how this has been resistance for a long time. It's fighting that zone. Could be breaking out here. So this earnings to me is pivotal. If you can get above and close above this line, then this is a nice looking one. But again, it's got this resistance above. It's got to get through before things can get real giddy with it. SMCI, the dog. The dog's popping a bit. I love how these lines are all messed up because no one really knows about the earnings reporting anymore. Now, this one, it's trying to recover. But what I do is I look at it and I say, okay, recently it's been outperforming the semiconductors, the AI kind of play. I know it's not an exact semiconductor play. Could it be a recovery play? Yes. Above this zone where it was broke down from, there may be a lot of shorts that are trapped because this was pretty obvious when we had this double bottom here and it gapped below that, and that was on really bad news. Like the DOJ was getting involved. You don't really get much worse news than the DOJ getting involved. Now that we're getting back above that, could have some shorts trapped. So might be time to take a shot on that. But you got to understand, and you just got to be careful. It's up 6-7 days in a row, so you might be buying a little bit of a short-term top. The other thing is that if the DOJ comes back and knocking, that could be problematic. So important zone above 40. I think you could take a shot. However, just know that, right, if the DOJ pops their head back up and says, you guys were actually up to some nonsense, right, then you got to be careful. And you could get another one of these gap downs and runs. So now, right, if there's enough shorts trapped in here, do I think it's all going to go all the way back to 120 or something? No, absolutely not. But could it go from 40 to 50? Maybe, right? I think the only thing to make sure is don't anchor yourself to these old highs. I know a lot of people did that with something like Peloton, which we'll talk about is actually next thing that people wanted me to look at here, which I actually really like the look of right now, but I just want to use it as an example to, I don't think there's a single world that in the next 20 years, 50 years that we are going back to $150 a share on Peloton. So if you're trading it, just like we were mentioning with SMCI, don't anchor yourself to this high and say we're going to get back to this high. Look at the most recent price action and say, where do I think from here we can come by? Right? If you're buying SMCI and you're saying I wanted to get back to all-time highs, anything can happen in the market. I just don't think the probabilities are super there. But when it comes to Peloton, now that we're talking, you see I already had this one all fancy marked up. This area, this $6-7 was so important. I remember, I think I answered a question about this a couple weeks ago here. So again, make sure you're tuning in. We pulled back into that zone. We kind of touched it perfectly, and then we had earnings, and we popped up from there. I don't think that's coincidence. That this big prior level was super important. So as we are holding now above this kind of $6 a share, give or take, and we're holding this gap, I think for me, I'm actually watching this one to see if we can get through the high end of this wick. So this was the earnings gap. So this is where all the nerds who read the earnings were fighting it out and saying, this is what I think the new earnings means for the company. They decided on that it was positive by gapping it up and holding that gap, at least for a number of days. But we have this wide range candle. So nice little turn up here. So that break, call it, 950 or so, I want to see quickly get us above 1050. And then from there, we could be into one of those stage 2 uptrends when it comes to that whole Stan Weinstein thing. I've talked about it enough, so I should find it. Weinstein. So yeah, it looks good. There we go. Yeah, so it looks great, but we need to just make sure that that it's going to continue to hold that way. And this is just what I talk about when I say stage two. This is roughly based off of his work, how markets generally move. You have stage one, which is just the sideways. This is accumulation. This is where value investors buy. Your Warren Buffett types, your Michael Burry types, that type of person that says, this is the value of the company. I'm going to buy it every time it hits that zone. Then you have the stage two as an uptrend. This is where more guys like me are buying the momentum. They're buying it because this is the line go up. Therefore, I buy people. And that's that momentum style. Again, not saying one's right, one's wrong. It's just there's different styles of trading. So you have the value investors buying it. Then you have that stage two. This is where momentum investors are buying it. And then you generally have phase three. This is where the value investors and momentum investors are starting to sell. And you generally have that the retail public buying it up here. And then you have some sideways consolidation there. Stage four is decline. Right? Again, looking at Peloton, now that we're talking about it, you can see this whole thing happen live in real time here, right? So this was probably your stage one, where we have all the value investors saying, oh, this is a really good company. This is interesting. And you have stage two. This is COVID. This is where you have just the momentum people starting to ride in because it's just going up all the time. And there's stories in the news about how, oh, everyone's going to work out at home all the time, blah, blah. Then you have your stage three. This is your accumulation. This is where all the professionals are exiting, and then all of the retail people are entering, and then you have your stage four decline. So when I talk about that, could this be doing that again? It could be. Now, again, I don't think it's going to get back there, but you have this stage one accumulation somewhere around $5. People started to come in, and sellers said, this price is too low. I'm no longer going to sell it. Buyers said, there might be some value here in this name. I've heard takeover target when it came to Peloton so many times. And then potentially, do you enter this stage one uptrend? And generally, the way to look at that is, do you break out of this stage one and then into the stage two? So that what we're seeing here, where we're getting a little bit of breakout, pull back, and then maybe we're going to continue. I don't know. That's the bet that I'm potentially going to make if that thing kind of happens. Duolingo. This thing has just been insane for a teach yourself a language thing. It's been wild, and there's been I know there's people like getting married and stuff because they met on Duolingo. Hilarious, but is grinding higher. There's not much. Some of these, obviously, I can rant for a while with some of these charts. Other ones, there's really not too much to talk about on this name. You broke your prior kind of structure high here, and you're continuing higher. So as long as we remain above 370, to me, this one looks great. I wouldn't buy it up here. It's a little bit too overextended, but if I got it on a break through 370, I'm just trading against that line. If we hold 370, I want to be involved. If we fail, I'll get out. But it just looks, there's no reason for me as somebody who's studied the markets and studied trends to ever bet against something like this. That's just been making new highs and new highs and new highs, right? You can read the studies yourself if you want. There's a lot on that just trends persist. And they persist for very long periods of time. And our job is just to identify when they exist and stay on them as long as we possibly can. GRRR. This GRRR is mentioned every time. You can notice that. So look at this chart and then look at ASTS. ASTS. Right? Same kind of thing. This anchored VWAP from all-time highs. I'm telling you guys, if you want to play these momentum names, and they're pulling back, this is a great way to kind of, it's not going to work every time. This is an investment advice, all that. Just a good line in the sand to say, hey, is everyone making money? Is everyone happy? Right? How are the vibes? I guess is a good way to put it. Are the vibes good? Well, if they're above the anchored VWAP from all-time highs, in my opinion, the vibes are good. Means that average price is making money. So, you know, there's nothing to do. But you're up again, 1, 2, 3, 4, 5, 6 days in a row. I can't buy anything up 6 days in a row, especially to resistance. I just can't do it because I feel like I'm going to be the guy to top ticket. It's going to come right back down. But this is a very strong stock. Now, same caveat I always give with this, it's played this song and dance before, where it gaps up, there's some sort of news, it moves higher, and then it tanks back down. But it moves higher and it tanks back down. Could this time be different? Yeah, maybe. Right. One thing I like about it, and it might be hard to see on your guys' screen. So this is Trend Spider here. Shout out. They have the earnings down here, and you can see -$2, -16, -17. Right. Earnings were bad for a long time. Now they're starting to perk up. Right. We're up now. We made a buck here, and we made 15 cents here. So we went from being a horrible money losing company to actually something. Here, we can just do that. It's probably a better way to, please use other data. Okay. Yeah, so anything that goes from being a money losing company to a money making company gets interesting to me, because when you're a money losing company, basic right here, apply. Yeah, you end up being you were a money losing company. Now you're a money making company. Now it's like, okay, they may not need to dilute shareholders as much anymore. There's a lot of things that come with now making money, and you're in an environment where there's 5% interest rates. That's like you have to make money. So could it be different this time? Absolutely. I wouldn't buy it up here. I would wait to see what the next pullback, because we're trying to evaluate trends. So we have a high, and then we have a pullback here, and then hopefully we break out, and then we have another pullback. And if that pullback is happening at higher levels, it means there's people waiting for these pullbacks, because that's where pros and institutions get involved on pullbacks. They're waiting for this to pull back to then buy it to have a bounce, but it needs to have some sort of pullback for that to occur. Speaking of something with no pullbacks, BBAI. A nice breakout of this zone right here. This is a great look. I actually tried to buy. I was hoping it pulled back here, but it never did. That's why I have this marked up, because I remember this one. Same thing for GRRR, right? The same. This is going to be in the AI kind of speculative space. It's had this. It's going to rip from $4 to 14, 15, and then tank, and then rip from 67 cents to $6, and then tank. So you just got to know the environment that this is in. However, it's a good look. It's a good look, and it's up same 5, 6 days in a row. So might need to chill out, might need to relax a bit, but very strong, just showing that a lot of these speculative AI names are still hot. So TEM and Nancy Pelosi pick. So I've marked this up. Full disclosure, I own a bunch of this, and I'll just go with my. I'll show you my trade, right in there. So right in this area is where I bought some. Again, I'll always tell you guys, I think it's super dishonest if people don't, unless I forget. So I will always try to tell you guys when I'm in something that I'm talking about, because there's just going to be a natural bias there. Obviously, I think it's going to go up, or I wouldn't be owning it. But why I took the trade is because you can see I've already highlighted this is the anchored VWAP from IPO. It just shows you where the average market participant is from the inception of the company. So from the birth of the company, you can see support, 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 support. It just kept banging on that level. So when it came under it and then broke back through it, and then we consolidated sideways for a few days, I think it might have been on this candle right here, I actually bought some, because what I'm doing is I'm going to look for a quick bet to see if it gets through these highs here and here. If it can get through that, then the beauty of owning an IPO that is breaking through highs is, you know, that every short that ever existed is wrong, and every long that ever existed is right. And you want to talk about a vibes check, which is, I don't even know if the kids are using that anymore, but that's what we're looking at when it comes to sentiment, is how are people feeling about the company? If you're at new all-time highs, they have to be good. So this, again, I like it. Same problem a lot of these are having, I'm seeing over and over again. So this is one of the reasons that I love coming in and doing this, because even I start to put together themes, maybe a little overextended, but we've been chopping sideways for 4 or 5 days. You don't want to see it reject this level. You don't want to see it hit this and fall apart. That's no fun. You want to see it break through, get every short in the world off guard. Let's actually check. Just FYI, you can always go to FinViz for free, and you can check 22% short float as of January 15th on FinViz. That's interesting. So this chart down here, this is the short float, and then here is the short ratio, and this is essentially days to cover. So take the short float, divide it by the amount of shares on average. That's what this number is. But this is the percentage of the float that's short. You can see they've been shorting this whole rip up as it's been moving higher. People have been shorting and shorting and shorting. That's great for me, because that's what I want to see. I want to see people short and be wrong. You know, I bring it up with the meme stocks all the time. AMC might have a heavy short float. Those guys are right. This thing is just continuing to tank. The company is diluting its own shareholders because they can't figure out a way to make money. You don't want the shorts to be right because then there's no reason for them to squeeze. You want something like this where they're getting more short as the price is moving up. To me, just looking at this right now, that put a whole lot of conviction in it. But as always, you never know for sure. I just closed my thing by accident. Yeah, so I want to see a quick move through here. That would confirm that 1/4 of every share is short. I want them to be wrong. I want them to be wrong pretty quickly. And I don't mind being on the side of who we all know is the greatest investor of all time, Nancy Pelosi. LYTS, LSI Industries. An interesting one. Interesting chart. Initial positive reaction because of earnings and then a pullback. For me, I like the fact that, you know, we're in a nice solid uptrend. This thing's been moving up for some time, so we're not bottom fishing junk. It was making money. It's another like thing that I like to see for my companies, that they make money and not lose it. And now we're holding this high end of the gap right here. This is a really good, for me, one thing I love to see is prior support becoming resistance, prior resistance becoming support. It just means that anybody who's shorted against this level is covering that short as it's come down. Anyone who missed this, who was like watching it and saying, well, I'm going to wait for this thing to break out in order to buy it, and then it broke out and gapped, as it comes back to that level, they're holding it. So I think this level is pivotal. I would not want to see a breakdown under that $20. If we break down under 20.50 to $20, I'd probably move on. The fact that we're holding it, I think, is a good thing. Again, I love this. I'm actually making a note over on my notepad here to take a look at this one, because as a trade, I always like these, just because I know very, very quickly when I'm wrong. Like the two things that I think you need to make or have when you make a trade is you need liquidity and you need to have an out. Those are the two things. Other than that, take your bets, right? As long as you have the liquidity to exit and you have an exit plan, have fun. I don't care if you're trading fart coin, meme stocks, whatever it is. You just need to make sure that you know when you're going to get out and that you have the ability to get out, is another way to phrase that. So I love trades like this because my out is very, very tight. If I'm in here, then if we break down under $20, I'm out. If I'm right, then maybe we get back to these highs. That's 25. So say I'm buying at 21, I'm stopping it at 20, I'm risking a buck. If I'm right, it gets to 25, I'm making $4. Just mathematically, that's a bet you gotta have to take. So it's one of those that you just have to take that bet mathematically over the long run in order to make sure that this is something that that you can do. So, all right, ALAB. Let's just take a second before we go to the next one. I know I teased everyone there. Let's take a look through here. Everything's about the same. I just want to take a look at the SPY. Again, I am a trader. I need to keep an eye on these things. Right in the middle of yesterday's range and right in the middle of today's range. So there's nothing really to be doing from the market's point of view anyway, right? We're right in the middle of all of these ranges. So yeah. All right, back to work. ALAB. Earnings tonight, tomorrow. ALAB. Period ending after hours. So yes, it's after hours tonight. Very interesting. We do the same anchored VWAP trick. Anytime I see a new IPO, I do this little anchored VWAP trick. Say, hey, is this something that people are buying near that anchored VWAP from IPO? In this case, they are. We had a nice push up. When we broke that anchored VWAP from the IPO price, we had a wicked trend. We came back down, we touched it, and we're holding that strong as well. So I like the look of this. It's a nice looking name in the short run. Now, when it comes to this earnings, we just got to keep in mind they are in the growing earnings and being rewarded for growing earnings stage. So this first earnings report, they made 10 cents a share, then they made 13, then they made 23. So earnings is going up. Need to continuously see that. We need to see earnings going up over time. Because if we don't see that earnings going up over time, this thing's going to get slapped pretty hard. Also, whatever occurred here, just looking to see something to do with DeepSeek. This must have been a DeepSeek move. This was a bit of a change in fundamentals. So I don't know what it was, but you can just see it in the chart. A big, something that generally moves like this and then has this big move. People got worried there. Came back up, filled the gap, and then pulled off of the gap. So this earnings is going to be hugely important. I think if we get back up inside this candle, if you see it around 121, 122, means everyone who got out of this gap is wrong. That could be very good for it. However, if we start to break this downtrend line on earnings tonight, could be that stage 4 uptrend. However, I just do like the fact, and I can draw it in here as well, that it is holding this anchored VWAP from the IPO. Came right down to the tick right there and then bounced from it. So it's pretty perfect. So if I was interested in this, that would be kind of my absolute worst case stop. I got to get out of this position if it hit that level. And I cannot say it enough. You can take any trade you want as long as you have an out and you're comfortable with that out is probably a good thing to say. If you go, okay, I'm going to lose money on this. I'm okay losing from where it is to like $80. I'm okay with that, right? It's not going to hurt my portfolio too badly. Again, I think you can take that shot regardless of whether it's ALAB or FART or whatever it is. CSCO. Oh, so here's my little earnings chart here. Just remove that there. Just hitting new all-time highs. Right? The earnings on this one are pretty consistent. 87 cents, 88 cents, 87 cents, 91 cents, 91 cents. So this, right, it's Cisco. It's a massive, massive, massive company. And it's butting up against not new all-time highs, but new multi-year highs. And is that the all-time highs? With these ones, you always got to go way back and you say, have these ever recovered from the .com? No, it's never recovered from the .com. But that's a pretty major high back there where it is. So this one, again, looks good. This is a good example for that ALAB, I think. Right, so ALAB had that gap down, that sell-off, and then it came up and it filled, and just like I talked about, when it filled that gap and all of these people were wrong, had a nice little push up, and now it's waiting into earnings, a couple days away, 2 candles away. So this is just waiting into earnings. Now, I will say, not a lot of stuff has gotten real positive earnings recently. It seems like everything reports earnings and then gaps down pretty substantially. So if you're holding something into earnings, you just got to know that that's a possibility. You are going into a binary event that's either going to send your stock to the moon or crater back to earth. And there's nothing really you can do about it unless you're going to punch out during the after hours craziness, which I don't think is the move. So, I know I asked for stocks around earnings, but just know that I just reiterate with everyone that's the case. The big event's coming up. You see, the last earnings had a big gap. No, that's 2 earnings ago. Had a big gap up. And this earnings, it didn't really do too much. Actually, gapped down a little bit and closed positive. This one, it gapped up and sold off, right? So these are big kind of market shaking events for these names. So just be careful. But we have a saying in technical analysis, something I haven't seen a study for, maybe I should do a study for, is that earning surprises and positive events generally happen in the direction of the underlying trend. So generally speaking, you'll probably see, or maybe if that saying is correct, moves in the trend on average, but you just got to know that they're going to be very volatile. You're going to get smacked in half a couple times. You're going to rally a couple times. It's going to be a volatile type of thing, but doesn't mean it can't happen, right? So Nice looking play there on CSCO if that ends up doing well. CHOR, I think this will probably be the last one today. This is a gap fill. So a little bit of a gap and crap, as it can be called, but a gap fill. So you guys notice we can go over some process here because I think process is important. If you're watching this, it shouldn't be because you think I'm some sort of genius, Nostradamus forecaster dude. Uh, but it's more about how I think about things and how I think about markets. Why I try to take my time to explain them, because hopefully, right, you can learn a little bit of technical analysis. If you want to take your CMT, it's right there. You should do it. So you notice one of the first things I usually do is I zoom out. So I want to know where we are in the grand scheme of things. Is this a good company that's making new highs? Is it a bad company that's selling off? Where are we in the grand landscape of the trading universe? This one, just like most things, had a bad time in 2022, 2023. No shame there. That's just everything did, right? If we zoom out to like a monthly chart, you can see we're right at all-time highs. Things actually doing pretty well. But like everyone, just had a bad time those couple of years. Don't really knock it for that. And more importantly, is above those August 2022 highs. Very important. And a nice uptrend since then. So that's why I kind of zoom out to begin with. So then I just want to eyeball recent highs and lows. And we talk about all the time that we're looking to see where sellers came in place and where buyers happened. So I'll just draw these out, but this is just what I'm doing when I look at a chart. There's no, amazing super secret pattern that we all know. Just okay, so we're in an uptrend. We can determine that. We're near all-time highs. The thing is going up. People like the thing. They're buying it. That's step one. It's what we want to see. We want people to like our thing. We don't want people to hate it. Next, where did buyers and sellers came in? So we have trend analysis and we have support resistance. Just knock the two of them out just like that. We hit resistance. We've got a bunch of resistance up here at 111. Every time it's gotten there, 1, 2, 3, 4 times, there's been a seller there. We have no idea when that seller is going to leave, but we know that eventually, generally speaking, this thing trends higher. So breaking that zone is only going to be a positive sign. And then we say, okay, well, where did buyers come in the last time things had a bad time? They came in right at these prior highs. So we have $80 right here. You can see as we broke through that, we made a new high. We came back down to $80. There's two big candles with two bottoming tails saying that, hey, buyer came in, defended that zone pretty strongly in both cases. And now we've been trending higher. This dotted line right here on the screen, that is earnings. That's just telling me the last fundamental event that I can see what happened there. Well, we gapped higher. It's good, right? So it's like you can see I'm just check, right? So I'm able to go through and say, hey, is this something that's good? Is that good? Is this bad? Is this good? So as we gap higher, we need to say, okay, well, what happens after we have this fundamental move, this gap up? Well, so far the last 3 days haven't been too great overall. Just haven't been the best. And we're continuing to kind of pull back here, and we're pulling back, but we are pulling back to I'll just put that there. Came back to this level right here. This is the level that we initially broke out of on earnings. So then this becomes, okay, if I believe that this uptrend is going to continue and that this 112, 111, 112 is going to break because this thing is generally in an uptrend, which it is. So for it to continue to be an uptrend, it has to break those highs, just has to. Is this a good risk reward area in order to get involved? I think so, right? Because you gapped up and you're pulling back. So if I were to see support at this $90 area, and just you don't have to be fancy with it, right? Zoom into the 30-minute chart. It's kind of what we're seeing right here. Say, hey, we sold off 30-minute low, and now we're holding. So if we start to see this resolve higher kind of by the end of the day or by the next day, then that's interesting to me because now I know I can get involved off this gap fill. A gap fill, again, essentially just means the psychology behind it. People are sad that they missed the gap. When it came back down to their price, they bought it there. Worst case stop, I know exactly this is where buyers defended the price before. If they don't defend the price now, then it's probably going lower. And then I'm looking to see if it gets involved higher. So you can see how, again, I hope this helped you nerds that stuck around for a long time, but you can see how I very quickly just kind of made this trading plan around this name. I want to be long because it's going up. I want to buy it roughly around here because it's pulling back into the gap. I am wrong if we break these lows, and then if we can make a new high, that's a 4-to-1 risk reward. Don't have to be right very often for a 4-to-1 risk reward in the long run to make us a bunch of money. So, as always, I appreciate you all for coming by. I enjoy doing these. I hope you guys enjoy watching them. For the stock twits guys that are putting this on, you may like it and retweet it and give it all that social media stuff that YouTubers ask for, because it helps them figure out what to do more of, what to do less of, and helps them grow their stream. So thanks everyone for coming by. Market looks great until the next tweet. So let's just hope that whatever tweet comes next is a good one. Yeah.